So tell us then, what is your methodology, your process, your strategy for buying these notes? Because you came in the beginning, you made some mistakes. You probably didn't know how the hell to analyze these things, like what to look for. So when you're doing this strategically as a business, as big as you are, what do you look for in a pool in order to in order for you to know that A, this is going to be a good investment, and B, like how do you even figure out what to bid on that pool? Like what's your analysis look like?
Yeah, so I'll start with what I didn't do initially, because I think that will be helpful
Yeah.
for those that may look to do this for themselves. And that is, I came into mortgage note investing with the eyes of a real estate investor, a landlord. So my whole focus on the due diligence process was on the property itself, which is the underlying collateral. And that was the huge mistake, because you get what you focus on. So if you focus on the property and buy based on the property with no with no thought on the homeowner and their ability to pay you every month, then you're going to get what you get, which is the property. So it was when I started incorporating the analysis with the homeowner, doing credit report analysis, skip tracing, bankruptcy searches, and I started delving into the homeowner to determine who the homeowner is and their ability to pay me
Right.
if I purchase this asset, and also what the underlying collateral is in the case I do have to foreclose.
All right. So I get that if you're doing one offs, but if you're buying a pool of, let's just call it $10 million of distressed mortgage notes, how do you go about as a business to do that on a bundle of mortgages at one time? Because you're looking at two different pieces on multiple, you could have 100, 200, 400 different mortgages and notes that are attached to a property. How do you do that at scale and quickly to identify, what the property is, what the underlying asset is, and then more importantly about the individual themselves? What does that look like?
It looks like a very grueling acquisition process, which it is. So a lot of companies at our level of purchase, they will do like spot checking, make assumptions, and you know build pricing matrices based on percentage that's going to fall out, and all of that. We don't do that. We actually do an assembly line operation where we analyze each individual mortgage. We're pulling title reports, so we're understanding lien validity, lien positioning. We're doing fair market value analysis, where we're using certain various data points and triangulating those numbers, doing credit report analysis on each loan, as well as skip tracing, bankruptcy searches, and then we compile all this data, and then into our pricing matrix to go and price out pools of mortgages. And we have a 20-person operation, so we have an acquisition team that that we kick into place every time we have a pool of mortgages we're purchasing.
So you got this thing down to a science. You systematize the shit out of it.
Yeah, everything is. Yeah, everything is. There's policies and procedures for every step.